There are two different market conditions, and in today's video I'm going to explain to you exactly how you can recognize these different market conditions. And guys, if you can recognize and apply the difference between these market conditions into your trading strategy, you will not only be very profitable as a short or mid-term trader, but you'll also know exactly when one market condition is over and when we are transitioning into another market, which will make you a great investor as well, being very good in calling tops, bottoms, or basically major market changes. So guys, let's jump straight into it. And the two market conditions that I'm talking about is of course a bull market and a bear market, and we are doing that on crypto because crypto is basically, or Bitcoin is basically the token and the asset class that I'm interested in and that I'm invested in since 2016, and I've seen already so much time the Bitcoin price. So I actually got into Bitcoin roughly around here. And so I've seen already a lot of things. So I've seen already a lot of different markets, and I know exactly how you can make the difference between the two, because there is a big difference between a bull and a bear market when we look at the data. And that's the most important thing, because you want to have data to back certain things up, to know whether we are in a bull or whether we are in a bear market. Because in a bear market, for example, in these red periods right here, you generally don't want to look for long positions. You basically don't want to long that much right here. But in the green periods, you want to be looking for long positions. You want to be buying Bitcoin, not selling. But right here in the red period, you want to be selling, because if you're longing right here at the wrong moment, these trades go against you, and then it's just an infinity till the downside. So there's a high potential loss. Right, while you are actually looking for short positions in the red area, these are more profitable, similar as you are looking for long positions again in the green area. But how do we know whether it is green or red, whether it is a bull market or bear market? And guys, this has all to do with the behavior of the traders. And that is the way that traders think. That is the social sentiment, also known as sentiment, the market sentiment, but also the way traders behave. And that is what we can see in live exchange data. Are people longing? Are people shorting? And what is the price doing while this certain buying and selling pressure is being applied on the price? So let me go with you guys to Whaleportal.com. Right here we can already see basically the year 2023, and here I can show you how the data of a bull market looks. We're gonna get rid of the support and resistance indicator, although it is a very good indicator. But what we can see right here, guys, is that generally, and this is the heat map number 2, showing us the buying and selling pressure. That is based on various things, but it's all based on live exchange data. So this is a formula looking at open interest, looking at the premium index, how many people are long, how many people are short, did they open a short with a market or limit order. So a lot of different things that are being taken into this calculation, but it basically is live exchange data showing buying or selling pressure. That's the most important thing you need to know. And of course the sentiment, because these are the two most important things to determine the market condition. Then, when we have a look right here from the start of 2020, or the end of 2022 basically, we can see we have buying pressure going on with very low intensity red selling pressure, which means that there's a lot of buying pressure, not much selling pressure. So generally in a bear market, this is already the first sign that I'm seeing right here. We were also pretty long right here on the channel, because we have been buying Bitcoin very much right here, and we also open long positions with leverage right here. But generally in a bear market, when we have buying pressure and the price doesn't go up and we do see some selling pressure, even though it's slightly selling pressure. This should come down. This should come down very heavily. Like this pattern right here, buying pressure not really going up, a little bit right here into selling pressure, even though it's very slightly. That should go up because this shows a change in market conditions, because we go from buying pressure to slightly selling pressure, right? But then we go back to buying pressure and the price just explodes. It just goes up. And then we basically see the characteristics of a bull market. We got buying pressure or low selling pressure, price goes up. If we have high selling pressure, price can come down. Doesn't necessarily has to be. But you always have to think in terms of risk and reward, right? If there is high selling pressure, like for example right here, you don't want to be extremely long leverage. Doesn't mean you have to take profit with your hodl position, right? When we are in a bull market. But a bull market generally works like this. Buying pressure or low selling pressure, price goes up. High selling pressure, the chances are increasing of a shakeout or increasing of a correction. And we can see that also right here. High selling pressure, price comes down. High selling pressure, price goes down. Buying pressure, price goes up. Period of selling pressure, price moves sideways to down, but we do have a low intensity red, so it is more of a consolidation than a correction, this I have to say. Then we go up, high intensity red, and this is actually pretty awesome, because here we can already see, this might be a little bit difficult to see, but the intensity red increases over time, which means that the price moves sideways, but the intensity red increases, which means the selling pressure increases while price moves sideways, consolidating. That generally means that we at least going to have some form of a correction until that is reset again. And that's exactly what we see. We see this one coming down, and then we have a period of, again, similar like here, we have a period of buying pressure going on with very low selling pressure. Again, that's a perfect cocktail for the price to go up. And then we see Bitcoin suddenly accelerating. It goes up, we get high selling pressure again, but the price goes up with high selling pressure. There's a very bullish signal. There's a bull market signal with this high selling pressure. In a bear market, you don't see the price going up. The price would slam down with these colors on the chart. But then you can see during this consolidation, which is kind of an upwards consolidation, red intensity decreases. Bam, price shoots up. We have high intensity red. Price does actually nothing right here on the daily time frame, just moves sideways. Until the intensity is low red again. That's the bull market things, guys. Price shoots up, and right now we are in such an accelerated state that we can see that the price just goes up even with high selling pressure. So this is the buying and selling pressure in a bull market. The image that we are seeing right here is a very logical data picture of a bull market, price action, and how you can use the buying and selling pressure basically to assess the markets right here. Once we enter a bear market, guys, it will be the opposite. So it will mean that this, even though we get a little bit selling pressure or a little bit buying pressure, the price can come down. If with buying pressure, for example, with such a, for example, right here, we have buying pressure, moves into a little bit selling pressure, then the price like breaks this low right here, so significantly breaks down. We can see the market conditions are really changing. Right? And in a bear market, even with buying pressure, when the buying pressure becomes very low intensity, so for example, very light green, the price can still move down. But that won't happen in a bull market. That will not happen in a bull market, as you can see right here. Every time we are seeing like the red bars, and this is of course on the daily time frame. You can also use this indicator in shorter term time frames, but generally this is showing where the price action is going. Right, we do have some green dots now and then, and even though when we have that green dot buying pressure, we do see that the days ahead often the price does come up, right, until we get a little bit red again. But this data visualization just shows a perfect picture on what's going on and that we are right now, especially this later phase right here, that we are in a bull market. And as long as that stays like this and we don't see the opposite indications with this heat map, then we remain in a bull market. Another thing, guys, what is very important, and we can maybe view that on the 4-hour time frame better, that is the sentiment. So the 4-hour time frame, you can also see that the intensity of the red is also already like changing. So for example, right here, low intensity red coming up, high intensity red coming down, low intensity red coming up, high intensity red coming down. Right here, it's getting a little bit low intensity red coming up, but price just shoots up. Crazy but very beautiful visualization. I hope you can see the resemblance in here, and also that you can connect this to the market conditions, because in a bear market with this amount of selling pressures, we will not see the price like just pushing through higher. That's not what I've seen since 2006 in the market. Now we have another thing that we can use, and then we can take the heat map out of it, and then we can have a look at the sentiment. I think the sentiment is very interesting because normally with a negative sentiment, the price goes up. Even with a bullish sentiment, the price can go up. And even though right here, I think this one is pretty beautiful, we have like bullish sentiment, we get a shakeout, price comes up a little bit again, we get negative sentiment and afterwards neutral, but especially this red squares right here, negative sentiment, price shoots up because we are in a bull market. And when in a bull market the sentiment turns negative, it basically quickly already means that all sellers already left, which means there's only one way to go, and that's to go up. But in a bear market, this is again completely different. In a bear market, the price can come down even with a pessimistic or negative sentiment. Similar as in a bull market, the price can go up with a bullish sentiment. In a bear market, the price can go down with a negative sentiment. So that is also a way how you can determine whether we are in a bull market or whether we are in a bear market. So for example, right here we got negative sentiment. Generally the price goes up during times of negative sentiment. Then we have positive sentiment, price can come down. That is very logical market behavior, as I explained in my cryptocurrency trading course, where I basically explained a very good strategy on how to short, midterm and long-term trade over on Bitcoin using Whaleportal. If you haven't seen that course, make sure to watch it. It takes 1.5 hours, but it will completely change your mind on how you are viewing the markets. I'll leave a link to that down below in the description. And at the cast of this video, you'll be able to see that video. It's completely for free. And right here we can see also negative sentiment. Generally, the price goes up. We got neutral sentiment, also can be quite good in a bull market. We don't want to have an overextended, overly bullish sentiment. Then it's where things actually get dangerous in terms of risk to reward ratio, probability ratio. You don't want to be overexposed to long leverage, high leverage positions when everything is very euphoric, because that's often where moments you have something like this where we see like these shakeouts, right? We get a very bullish sentiment right here for a longer period of time, even though price goes up after some time of neutral sentiment right here. We do get these shakeouts along the way, so you want to be careful with that. You want to basically be careful with that, because you don't want to be close to the end of a move, right? Like in the trading course, I'm explaining exactly how the markets moves between buyers and sellers, and that there's always a turning point where buyers become sellers or sellers become buyers. And what you basically don't want, you don't want to be at the wrong side of the trade at the end of this move, just to catch maybe a little bit of money at the end, but maybe be very close to the wrong side. You want to be early with that shift on the good side of the trade, if that makes any sense to you guys. So this is basically how you can determine, using Whaleportal, whether we are in a bull or in a bear market, and you will be able to determine that very, very soon, because the market conditions right here, like I said, will be completely different than right here. And the interesting thing is that it's already visible right here, and I can give you let me show you. I can give you an example. If we bring out, for example, the funding rates over on BitMEX, and this is not very complete data because this is just one exchange that we are looking at, but I can just give you a little bit of a, let me check, height march, this one, so it's a little bit better visible. So you see a little bit what I mean with the behavior of the traders and the behavior of the price action, because you gotta analyze them both. You gotta look at, okay, how is the trader behaving, how is the trader feeling, and how is the price reacting with these behaviors of the and feelings of the traders. So generally, like in the green zone right here, we have negative funding right here. Price goes up, but I can also make like a vertical line here. Very big negative funding, price goes up. Negative funding, price goes up. Here we have negative funding starting here. Yeah, generally price goes up, right? And in the end, it becomes positive funding. The positive funding tops right here, and the price rolls over. And then right here, we have period of negative funding. Price goes up. So you can already see right here that generally with a negative funding rate, it depends of course how negative that funding rate is and so on, and you got to check these funding rates on multiple exchanges to get a better data set, not look at one particular exchange but get an average of all the exchanges, because it will be more accurate. And of course it's better to look at different metrics as well, but this is just an example to show you that during a bull market here also negative funding rates, price goes up until funding rates tops, price comes down. Here negative funding this period, I can also make here, price goes up. So you can see in the green zone right here, which is bull market conditions, price goes generally up with negative funding. Then we go to the bear market conditions, and this is a complete different market, guys. Now we can see positive funding, very low positive funding, price goes down. Negative funding across the board, it has been negative for a very long period of time, price goes down. That's kind of crazy, right? It's completely an opposite data profile as we are seeing right here. And this is what most traders don't understand, because you got a lot of traders, they are using, for example, funding rates, open interest, they're using these live exchange data into their analysis, but they don't understand that you gotta analyze it together with the feeling and behavior of traders and behavior of price. But behavior of price is, of course, we can see right here in the chart. But then you can see already that if you know the funding rates itself, it doesn't mean that much, because you got to know which market conditions we are trading, how did the price behave before, where are we in terms of time, how is the trader feeling, what's going on. So for example, right here we have it's very euphoric market, everyone is so positive, so many people are in crypto, price goes down with negative funding. That's the first huge warning signal, very huge warning signal. And most people will not understand right here. They will not recognize that the market conditions are changing. And I got to be honest, it's also very difficult, because you are in a situation, you got to imagine, you are in a situation where everyone around you is positive about crypto. Everyone is making money. And then suddenly you're going to break the party and say like, okay, I see a warning signal. I think the bull market is over. A lot of people will talk against you and they will not believe you. They will tell you are crazy. Maybe they even get negative. They will express negativity towards you. So maybe it's even better to keep the stuff for yourself, right? But this is what I've learned in the past. I've been into one bull market, one bear market, one bull market, one bear market. I've been basically right now, this is my third bull market, and I've experienced 2 complete bear markets where I've seen a lot of my portfolio, a lot of my unrealized gains just getting lost by the correction. But I've also been very aware, because during these bear markets, I was full-time in crypto. I'm full-time in crypto since 2016. And this is one of the things that I noticed. That's also the reason why we developed the tool Whaleportal, to make this type of stuff easier for you. So you can basically recognize which market conditions, you can recognize what traders are feeling, you can recognize where's the selling and buying pressure, all of that stuff. So yeah, guys, that was basically the topic of today's video. Which market conditions are there? Bull market and bear market. How can you recognize them, and how can you quickly recognize when we are shifting? And this will make you a very good short-term, mid-term trader, because you know on which side the market most likely is. You know when to look for long positions, when to look for short positions. But this is not only about trading. This will also make you a great investor, because you will be able, once you understand this, you will be able to spot these turns. These turns in the markets, you will be able to spot them very early, while others are still caught in that emotional sentiment. So you might not catch the exact bottom, but you catch it right here, this period, when you can see, when there, that's the goal. That's where you can see the market conditions and the price. That's where you can see it. Of course, you can also say we already had an 80% correction. Combined with this data would even higher your probability. But similar as here, maybe you don't catch the exact top, but then during these candles, you will see, hey, the market actually behaves different than it did over the past years. I think we just finished our bull market. Simple as that, guys. Simple as that. And then, of course, in the bear market, you want to change your perspective. You want to look more for short positions. Every time the price pumps, you want to look to sell Bitcoin, open short positions. So yeah, definitely very valuable information. Guys, if you have any questions, drop them in the comment section down below. I would highly recommend every single one of you, of course, to use Whaleportal. This is a product that I built myself. We are continue to build this product, and it's a very good product for short-term and mid-term trading. We still have a couple of spots left, because the first 100 users could get a discount up to 50%. Right now, there are still some spots left, but we're almost full, so we are going to close that discount very soon. So if you are interested in that, you can still enroll on whaleportal.com. Once you have your enroll price, it will be for a lifetime. So if you enrolled for, let's say, $35 per month or $45 per month, it will be for a lifetime as long as you have your account, even when we are doing new updates and stuff, because right now we're working on the alert sections where basically users can get alerts on what's happening right here. So for example, when this thing is going up, you can set an alert, or when the sentiment is changing, you can set an alert that will be sent to your email. We are working right now on that. That's also based on your feedback. So yeah, guys, again, I would highly recommend every single one of you to watch that trading course of 1.5 hours that I've created. It's a very powerful trading course. Even though you don't use the Whaleportal dashboard, even if you don't use this platform, doesn't really matter. The understanding of the markets from you will be completely changed. It will all make sense. That's what I think, because I just made a very simple theory, a very simple explanation on how I think the markets are working. I'm explaining that in that trading course, which will make it easier for you to be now and then a contrarian, because you understand these market mechanics. Nevertheless, guys, watch that video, drop a thumbs up if you learned something. If you have any questions, ask them down below. I'll try to answer them as soon as possible. Subscribe if you haven't. I wish you all a beautiful day, and I hope to see every single one of you in the next video.